The last 40 days have been absolutely insane, with the market dropping as much as 20% from its highs at one point. And yet, here we are about 1 month later, and global ETFs have rallied more than 17%, eliminating most of the losses in record time. Not to mention my small speculative allocation to Bitcoin, which has been on an absolute tear over the past month, getting close to its all-time highs again. Does this mean we're out of the woods already and that the bull market is back? We'll see about that. I wanted to make this video not only to share how my own investment portfolio has been performing in actual numbers, but also to check in on how you guys have been doing, since I'm sure this has been a roller coaster of emotions for many of you, especially if you just started investing recently. I'll of course also tell you how I'm navigating these difficult times myself and how I'm investing my money right now. Let's start with stocks in a form of low-cost ETFs, where the large majority of the portfolio I share with my wife is invested. After a few trade deals between the US and other countries were announced, US stocks started recovering. But the latest one with China that just happened was undoubtedly one of the most significant ones. As a result, the global FTSE index jumped as much as 3.8% today alone. Since the US stock market essentially crashed because of the ridiculous tariffs its government announced on Liberation Day in early April, it was clear that the opposite was going to happen if tariffs were cut substantially. I'd argue close to zero tariffs would be even better for global trade, but okay, at least this is still a lot better than where we stood a month ago. As for where the ETF portfolio I share with my wife now stands in actual numbers as of May 12th, we're finally seeing some relief, rallying 5% over the past week and 10.4% or plus 42,600 euros over the past month alone. That being said, we haven't made a full recovery yet. We're still down 4.3% since the start of 2025 after dropping as much as 17.9% at one point, and on a 12-month basis we're actually up 6.6%. The US dollar finally gained a bit in value against the euro over the past month, which also helped our portfolio recover a bit quicker, since a global FTSE Old ETF still contains about 60% US stocks. As for our average rate of return since we started investing in ETFs in 2017, we're currently at 10.43% per year, and we're up a total of 114,200 euros so far. By the way, you can find my favorite low-cost brokers for ETFs in Europe linked down below in the description, which is a great way to support me as I don't do sponsors on the channel. Now, does this mean we're out of the woods, the crash is over already, and we can now look forward to a continuation of the bull market? That's certainly possible, but there's no way to know for sure, as the market is moving quickly in either direction based on whatever is coming out of Washington every day. The latest announcements have, however, lowered US recession odds quite substantially, which is a good thing. One thing I'm pretty sure of is that this year is going to continue being highly volatile. So it's probably best you don't check your portfolio every day and just stick to your long-term strategy. That's because losses, even if only temporary, feel a lot worse compared to profits. You may have noticed this yourself last month. If your time horizon for ETFs is long-term, meaning at least 5 years, ideally 10 years or more, you're not doing yourself any favors by checking on your investments several times a day. And if you notice that the market crash in April was too hard for you to handle emotionally, you may need to rethink your strategy, as your allocation may be too aggressive for your risk tolerance. Adding a money market fund or holding a higher percentage in cash on a high-yield savings account, for example, could be a good way to do that. Check out this recent video of mine for what I believe to currently be the best ways to earn interest on euros while minimizing investment risk. Speaking of that, my wife and I earned 40 euros in interest on our cash reserves on Trade Republic last month, with the bank now automatically deducting taxes for us in Austria, making things a lot easier. Okay, now let's get to my speculative investment in Bitcoin. I haven't talked about my small allocation to Bitcoin in a while on the channel, so I figured it was time to give you an update. Bitcoin has been on a monster rally the past month, shooting up as much as 28% in 30 days and holding up better than stocks with a 2025 performance of plus 4% so far. While there are obviously no guarantees, it's now looking more and more likely that Bitcoin could surpass its previous all-time high in the coming months, especially since it seems closely correlated to global money supply M2, which has been rising again as financial conditions are easing around the world. So I'm still feeling quite bullish about Bitcoin long term, but it's definitely not for everyone, as it's extremely volatile. If you're considering a small allocation to this high-risk asset, you should have a time horizon of at least 4 years, meaning one full Bitcoin halving cycle. Let's finish things off with how we're investing right now. If you're expecting anything exciting, I'm sorry to disappoint, but our strategy remains as boring as ever. Okay, maybe not boring from a risk perspective as it's highly aggressive, but quite simple. 90% of our monthly savings continue flowing into a single ETF, the Invesco FTSE World, and the remaining 10% are going into Bitcoin. We also have our emergency fund, of course, which contains about 6 months of living expenses in our case, but that's it. This allocation will likely change once we're retired and planning to draw from our portfolio, but right now we still have an above average income, so we feel no need to be more conservative. So yeah, sorry for making this a shorter and less informative video than usual, but I felt the need to update you on what we've been thinking and doing as far as our investments go before our trip to Italy. I'll be back next week with a longer video I sadly wasn't able to finish on time. Now I'd love to know in the comments how the last 40 days have been for you emotionally and if you changed anything in your strategy because of it. Before I take off, you can find my favorite low-cost brokers in Europe to buy ETFs down in the description below, which is a great way to support me as I don't do sponsors on this channel. And if you're wondering if a one ETF strategy still makes sense in 2025, given everything that happened so far this year, you need to watch this video next. As usual, none of what I mentioned today was meant as investment advice. I'm just openly sharing my personal opinion based on my own experience as an investor. Thank you guys so much for watching, have a wonderful day, and until next time.